Professional English for Equity Research, Thesis, Catalysts Recommendations. An equity thesis is your one-sentence view of why a stock is likely to win or fail. It names the primary driver, for example, accelerating revenue, improving margins, an attractive valuation, or gaining market share, and shows how that driver could move the stock. A strong thesis links business facts to valuation. If gross margin expands 200 bits per second, fair value rises to $X. Keep the tone measured and testable. Rely on evidence you can track, KPIs, management disclosures, competitive data, so the thesis can be validated or falsified as new information arrives. Catalysts are time-bound events that can reprice shares by changing expectations. Think earnings reports, updated guidance, a product launch, regulatory approvals or investigations, or major customer wins. Be explicit about the timing window and the direction of impact. Q3 results could drive a positive revision if subscription growth greater than 20%. Avoid vague words like soon or buzz. Use observable triggers, dates, filings, conference appearances, or shipping timelines. Clear catalysts help you set expectations and measure whether the re-rating you anticipate actually occurs. Lead with your rating and time horizon. Buy 12-month. Pair it with a target price and the implied upside/downside to today's close. Every recommendation should anchor on your thesis and catalysts, not hype, narratives, or headlines. Use hedge-aware verbs that show discipline. Expect, anticipate, forecast, view as likely, or see risk of. Example: we expect margin expansion to continue through FY25. We anticipate guidance raises in Q2, Q3. This style communicates conviction while acknowledging uncertainty, vital for credibility with professional readers. Use clean, punchy lines that tie to your model. Examples: 1. We initiate at buy with a $X target, plus Y%, based on FY25 to 26 estimates. 2. Our thesis: expanding driver, e.g., premium mix, lifts, VIL human metric, gross margin, FCF yield. 3. We expect Catalyst to unlock a re-rating in H2 as visibility improves. 4. Key upside risks: faster adoption, favorable mix shift, operating leverage. Add a sentence connecting numbers. If RPU rises 8 to 10% and churn stays below 2%, we see multiple expansion from 18x to 22x. Keep it evidence-led and verifiable. Neutral does not mean indecisive. State balance clearly. 1. Initiate at hold. Risk/reward balanced near $X. 2. Execution is solid but valuation already reflects strengths versus peers. 3. Catalysts are limited near term. We wait for trigger such as margin inflection or a major enterprise contract. 4. Watch list: margin trajectory, competitive responses, hiring pace. Add specificity. At approximately 24x next year EPS, upside requires beats or a new product cycle. This language respects the company's progress while signaling what would change your view. Be direct, fair, and data-based. 1. Initiate at sell with $X target minus Y% based on normalized margins. 2. We see structural headwinds from rising costs/regulation and slower demand. 3. Catalysts skew negative. Risk of miss, price cuts, churn in Q2, Q3. 4. Downside risks: faster share loss, sustained pricing pressure, delayed approvals. Add mechanism and monitoring. If unit growth stays below 5% while promotions persist, we see multiple compression from 20x to 15 to 16x. Keep criticism professional, focusing on drivers, not drama. Quantify every claim. Cite KPIs, growth, RPU, churn, comps, peer multiples, and scenarios. Bear/base, bull. Use ranges and confidence words appropriately. Base, 10 to 12% growth. We're moderately confident given backlog. Flag assumptions and sensitivities. Thesis depends on 200 to 300 bits per second mix shift. Elasticity is the key risk. Keep sentences short and avoid idioms so non-native readers follow quickly. One clear paragraph beats 3 fuzzy ones. Aim for writing that another analyst could replicate, check, and update without guessing your math. Follow a simple workflow. 1. Build the thesis. Name the core driver and show how it links to valuation. 2. Map catalysts with timing and expected direction. 3. State rating/target with implied upside/downside over a clear horizon. 4. Write in precise, time-bound language that is easy to test. 5. Backstop with risks and specify what would change your view. Keep consistency across thesis, catalysts, and recommendation so the story holds together. When everything aligns, your note becomes both convincing and accountable.